Okay, so Apple is still sitting on this 135.50, right? So this is, you get these thick levels. I do that because it's important. I had mentioned on Friday, where was I? Here. I said it would not surprise me if we bounce back up to 138, right? Remember that 138 is quarterly. So what did we do? We tagged a weekly level, this 134.54, literally look at that, 134.38, close enough for government work. And then we closed, what was the close? The close, 138.38. Oh my God, 5 cents, whatever. I'm bad at math. But the point is, really, that's how pivots work. They really work. Now, we just opened below that. So it is bearish below 138. And I'd mentioned this was a massive, expansive, bearish bar. The size of the bar also matters, right? Like this is a gap down. That's a gravestone doji. That's done. Trend is done. Apple's done going up. Seriously, I'm committed to that. Now we have this kind of a little push below the 10-week, a little inside, a little bounce, and then a bearish engulfing. And then we close, but we obviously close below the 10-week, and that pulls it down. It pulls it down. All right, we came all the way down to 138 quarterly, which was my price target on that short. We stabilized, but had a little gap and crap. Then we had another little gap and crap, but we didn't break. And then we had that push higher, right? Post earnings, we took off like hot fire flames right into 157 the next quarterly. Perfect place to short. Rolled right back over to 138. So now what? We wait. If you're short, you're okay, depending if you add time, because IV is still getting played with, right? And it's very hard unless you are eyes on the prize on like a 15-minute chart. But the point is, this trend is still failing. It's still falling, I should say. But opening below 138 doesn't mean we're going to stay below 138, but that's absolutely where you want to stay below to press short. If we opened above it, I would have said we're going to make a run for 145. Right? This one right here. But look what we did. We came right up to the 200 inside, roll over. And I said, this is my level right here. It would not surprise me if we, take out 148. We did hit 144.50. We did. And we gapped below it. That's so weak. This is just so weak. All right. Anyway, then we tagged 135. So that's the next level we need to take out to continue lower. Does that make sense? We had a nice week open below 138 if you're still short. On a daily, though, we need to take out 135.50. And remember this big old line right here, right? That was right here, February 21st, yen intervention. That's earnings. Totally bogus. There's just no way. I didn't believe that. They pre-announced 2 or 3 times of how demand was weakening and supply chain was straight, it was whatever. There's just no way. Anyway, this is right back to where we had that big bounce on the 13th. That's what has to break. So we could still bounce into 141.67, but this is what we need to absolutely break. This is the 35.50. So if it's going to bounce, this is where it's going to absolutely try. But that's your level, that level I just gave you. But by December, I have, it's so funny. I was talking about this, I forget with whom, but I have December, but I think this is going to be a really long slog unless we get some solid, oil or volatility or rate spikes. I think this could take until March. So, it's kind of like having, remember the March 40 VIX call that I posted in Swing? It's a Volmageddon type of hedge. Because I think we're going to have something between now and March. And I don't know, obviously we get a year-end rally. That's, but between now and March, I fully expect this to be down to 125. Here's your 115 and then basically 105. So $10 increments. But this could take a little while. It is on support. And last time it was here, it got really defended, got really rejected, formed a gorgeous morning star reversal, beautiful trend reversal with a gap down, rallied right into that resistance, and now we've rolled right back over. But this could chop about, especially if we get a year-end rally. Yeah, so for me, it's this 122 area is monthly support for Apple by December. But we're sitting right now on 134.54, which happened to be, you know, all this kind of drama space really took off. So we have some support here. This has to break. But you know how I feel about this, right? First we tag, then we break. That was the 50 week. We had a massive rally. Thank God, otherwise the market would have careened over an edge, right? That was very, 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 very clear in June into July, August rally. And then the trend was busted. We're right back where we were back in June. And it's looking kind of peakish. So we bounced also around this 100. This, I think, is the break. And the next time it's going to head back in time to 115. There, you can kind of see this. That's, remember how I had these $10 increments? 125 is the fib 78.6. Wouldn't be surprised if we bounce. And then we go down and tag this 100, which is like the 115. And then we bounce, and then we head down to this kind of 104, 105. But I don't think that's until next year. First we tag, then we break, and it's looking kind of peakish. But between now and March, I fully expect this to be down to 125. Here's your 115, and then basically 105. So $10 increments.